Hello, Ashwin.
How are you?
Not so good. I want some clarification.
Of course.
My portfolio with you since the month of March and April has been suffering some paper losses. And of course, every time I urged you, Ashwin, let's do some business, let's trade, you were rather reluctant.
Yes.
And I think my layman's assessment is that the market was kind of getting ahead of itself, worrying about what the Fed would do with interest rates. They were expecting the worst case scenario. So I'm guessing everyone was holding back for that reason. And then yesterday, which is why I'm on the call with you today, the market has rebounded by close to 1,000 points. Am I right?
That's correct.
Would you like to speak to this, please?
Yes, this is
I'm
our
hoping
first
we
video.
can make some money now.
This is our first video in a long time. And you noticed, Tessie, when you said buy something, I said no. Now, let me recap the whole situation for our viewers to see what is happening. Now, in March, the Ukraine war broke out. The markets tanked. And then it went up for a while, end of March. And then in April, Powell opened his mouth and said, we have to increase interest rates seriously, okay, by more than 50 points. And that's where the market got ahead of itself. And then we imagined the worst case scenario of there'll be 7 to 8 rate hikes this year.
Exactly what I said,
now,
yeah.
Notice, Tessie, while you were panicking, or while all our clients were panicking, not only you, we were sitting tight and looking at logic. Let me explain what I mean by logic. The Fed cannot just suka increase interest rates 7, 8 times. Why? Because they will bring about a recession and look like fools. And we were holding on to that principle that the Fed will not raise interest rates crazily 7 to 8 times, and because they don't want to cause an inflation, recession, and inflation will stabilize. And last night, Powell said exactly what we predicted, Tessie, once again. Let me explain. Last night,
that's the guy behind you, Jerome Powell.
That's the chairman of the Federal Reserve. Now, Powell said that the central bank was not considering a 75 basis point hike in future meetings. He said, we are not actively considering 75 basis points. He said, so a 75 basis point increase is not something the committee is actively considering. I think, listen to this, I think expectations are that we'll start to see inflation, flattening out. This is what we said. Inflation will flatten out, and that will give the Fed no excuse to raise interest rates. Why? Because once the supply chain normalizes, inflation will normalize. So, you see, this is what I always say, Jesse, do not panic. Look at logic. In March and April, even May, first week of May, the market threw the logic out of the window and said, no, we are sold. They've smashed all the tech stocks. They smashed all the quality names, and we were sitting down there smiling. But guess what? For all our viewers, for the info of all our viewers, until yesterday, we have not bought any stocks because we were waiting for this Powell event risk to come to an end. Because he could have gone the other way around and said, we expect another 10 rate hikes, and the market would have been screwed. But like I said again, before we imagine the worst case scenario and nightmare and shit ourselves in the pants, the Fed cannot afford to have a recession in America. Understand that clearly. That's why we are here for you. That's why we have so much research, so much info, and we have our algorithm.
So I'm hearing that you need investors to have a cast iron stomach, so to speak, because we want to factor in the risk, the risk element. But at the same time, Ashwin, the Ukraine war is still ongoing, yes, and logistics haven't quite returned to normal due to the pandemic. Yes. What would you say to that?
You see, I don't know whether you've seen your portfolio again. The Ukraine war has enabled us to make more money. We are buying the energy sector aggressively, and we're also looking at natural gas. For those who want to know how to make money from the Ukraine war, please contact us. We will craft a portfolio for you that can make money every day from the Ukraine war.
What you mean to say is
we have been backing up on that.
Through the volatility?
No, because the Ukraine war has presented itself an energy complex opportunity. Energy complex means oil and gas, oil and natural gas. There's money to be made in that. Okay, that's what I'm talking about. The Ukraine war is presented as an opportunity, and if you want to tap our brains, please let us advise you, and we'll tell you how to make money from oil and gas. Because
so what happens now with May and this recent rebound? What can we expect to see?
there will still be volatility, but right now the market is not going to go out of its brain and psych it up, say, 7, 8 rate hikes. No, we are back to square one again. And like I said in the beginning, in the videos, all the videos, as long as you stick to quality names and quality businesses and sectors that will thrive, you will never go wrong. I stress, never go wrong. And that's what we've been doing. That's what we're doing. When Ukraine war break out,
factoring in the risk element, because like even for me, there was a paper loss for the last 2 months, but we held at it, and we didn't buy anything, which was why I was quite curious.
Why I didn't want to buy anything, Jesse? Because I didn't want to add on risk until this cobweb was cleared. And as of last night, the misunderstanding or the market getting ahead of itself, finally those fears have been laid to rest. So now we know Powell will maybe increase 50 points in the next 2 meetings each. So 100 points from here, not 500 points, not 600 points, no. And he has assured there will be no 75-point hike. And he has said what we have been saying: inflation will eventually flatten out. What
will happen in the how would you see the market behaving in the next 3 to 6 months?
Not travel in one straight line, but it will be smoother and more stable. Like I said, what has caused inflation? The disruption of the supply chain. That's all. That's all. It's not because people have too much money and they're spending money like crazy, because there are not enough supplies.
Right.
So this is a unique inflation category. It's not your normal inflation category. It's different.
Okay, I understand. Thank you for the clarification. Is there anything else you'd like to say to round off?
I like to tell our investors, like I said, as long as you buy quality companies, you will not go wrong. Okay? Paper losses, please note, paper losses are the name of the game. And volatility is an elevated level over the last 5 years. The last 5 years, volatility is up. So I'm sorry to say this. If you can't bear to see paper losses, not actual losses, and if you can't afford this roller coaster, then it's better for you not to invest.
But you have
volatility is here to stay.
But you have been quoted as saying you can make money in up markets as well as down markets. So
let me explain to you how. For our clients who have enough margin, I'm talking about like $200,000 onwards, or even $3 to $5 million for our private clients. In the last 2 months, we have been buying the US dollar aggressively while the stock market was dropping. This is what I mean to say that you can make money both ways. So while the stock market was dropping, we are buying US dollars here. They are not only hedged, they are making money from the US dollar going up. So let me show you the exact scenario. Last night, the stock market went up 932 points, Dow Jones, and dollar started dropping. Last night at 2 a.m., we unwound our dollar hedges, and now we are long stocks again. So this is what I mean, Jesse, when I say you can make money both ways. When bad news creeps in, you buy US dollar index and you buy dollar yen. Dollar yen has climbed 700 over pips. Okay, but last night we started unwinding our positions on dollar yen and dollar index because the stock market went up again. So this is what we always do. If you have enough margin, we can buy the dollar against the yen and the US dollar index, okay, when bad news comes in. And then when market stabilizes like now, we unwind the hedge and then we back on to long stocks again. So this is what I mean by you can make money both ways, but you have to have enough margin, meaning I'm talking about at least 200,000 US for retail customers, and for private clients, $3 to $5 million US.
Okay, thank you so much.
Because very few people talk about this dollar angle, you see.
Yeah.
The dollar play is a very nice hedge against stocks. In fact, for us, it's a mantra. Every stock owner should belong the US dollars when the dollar drops. When the dollar drops this time, when the dollar drops to a considerably low level, we will start buying the dollar again. Because when the next correction happens, we'll be sitting pretty and our position will be hedged. That is how we play. That is how we play.
I'm grateful because I doubt if too many retail investors understand this. So
this is what
thank you for explaining this. This is exactly Yeah, this is exactly
That's
what I
what the
wanted you to explain. Yeah.
Yes, yes. So please, stock investors, it will not be one straight line. There will still be volatility, but volatility is your friend, not your enemy. Make money from volatility. Don't be afraid of it. Whenever bad news comes in, whenever uncertainty comes in, long the US dollar against the Japanese yen, buy the dollar index. The dollar index is the index that quotes the dollar against 8 different currencies. It's in one index. Okay.
Okay.
DXY.
So how do we contact you, Ashwin?
My email is ashwin@ppchk.net. On WhatsApp, it's bit.ly/algotrader. And our YouTube channel, bit.ly/algowealth.
Thank you so much for today.
Thank
We'll
you.
see you again soon.
Thank you.